As you can see, I have a lot of things on my chart, like 12 indicators, and each one plays a role. And you don't have to look at all 12 of them at one time. I certainly do not. I only look at two indicators at a time because each one plays a role at a specific time in the sequence of the candles as the trade forms and progresses. So there's only certain things I'm looking for. So I'm going to take you through just what I look for each day as I am looking to make a trade. So as you can see right here in this lighter background color, that is the pre-market. And the market opens at 4 a.m., pre-market does, and goes till 9:30, which is this area right here between the light and the dark. Now it goes between 4 to 9:30, and at 9:30 regular market hours opens. And that's why I've chosen to use a darker color when regular market opens. But as you can see, the candles are red and going down, starting at pretty early in the morning. This is like 7. I think it went up earlier at 7. And then, so this is the high up in here. And then at 7, it starts going down. I wish I had an image of this before 7, but I don't. But for this presentation, it's not necessary. All we need to know is that the candles are coming down, and so they're red. And now, right here, they start going up at 8:50. They go up a little bit. What is that? 10, 20, 30, 40. They go up about 40 cents. You can see over here. That's $3.20, 3.30, 3.40, 3.50, and the high just over 3.60. That's a pretty good little rise, but I don't usually like to trade that. That would be a good trade if you had sold it right then, right? Because what did it do right after that? It went down. But notice it went down before opening. So 10 minutes before opening, this thing started going down. So sometimes I trade those and sometimes I don't because I'm a little leery of what's going to happen at opening, because usually like 95% of the time, a stock, even if it's rising, will go down at opening. Now, why is that? Because most people set stop losses on their trades, and everybody knows that. And so there are people who are trying to buy those stop losses. So they want to take your price down, and your stop loss, which is an automatic sale. You might not even be looking at your charts, but it will sell automatically. That's what a stop loss is. It's an order to stop the losses. So if you had bought that and it starts going up and you have a stop loss, then when it starts going down, that would trigger your stop loss order, which means you want to stop your losses, meaning you want to sell it and get out. So everybody knows that, and so they will try to take this price down at opening so they can buy your stop loss. They're going to buy your stocks. And then when it goes up later, of course, they'll make a profit and you're already out. So at this point, just before 10 minutes before opening, it starts going down again. And you can see it goes all the way down to the low after opening would be about 10:15 a.m. And so you can see the candles turn green and start going back up. And you can see I have a white line there. This is a whole moving average. So when the stock is going down, as you see up here, that line is red. And when it starts going up, it turns white. So that helps me. It's just another signal I have that helps me recognize that the stock is going up because the white is brighter. It stands out to my eyes. I might be looking at something else and I can catch that white easily. The candles being green also indicate it's going up, but the white really stands out. And you can also see that I have a white arrow right here. And I believe this is my, I think that's a crossover, but I don't use that right now. No, I'm sorry, I take that back. That is a indicator on the MACD histogram. You see down here at the bottom, that same white arrow appears at the same place, and this white arrow appears on the histogram at the same place on the chart. Now, what that means is, of course, I have the MACD histogram on the bottom, but instead of the MACD bars, red and green bars, I'm using TTM squeeze bars because those bars are bigger, they're taller, they stand out more. And I've had to adjust the numbers to make it work. So the MACD is set on a certain setting. See, there it is, 12, 24, 9. And my TTM squeeze is not set at 12, it's set at 10 because I want it to work with the MAC. So I set my MAC first where I want it, and then I'll find a correct setting for the TTM that matches the MACD setting. So I've simply eliminated the MACD bars and substituted TTM bars. So that works for me because it makes the bars, like I said, bigger on the bottom and I can see them easier. Um, so, and then you can see my other lines that I have here on the chart, a dashed blue line, and then a dashed purple line, and a dashed yellow line. And you can make the colors anything you want, whatever you prefer. I like to make them something that stands out to my eyesight and I can see them a lot clearer. I don't like a black background because the contrast is so great, it produces a lot of eye strain. So I want to eliminate eye strain. So when the dashed blue line goes below the white whole moving average, then I know the stock is on the rise. Now you can see that I'm a little bit past the white arrow on the MACD. I mean, the arrow is here and it didn't start going up till here. You can see right here it did go up some. It went up like 20 cents right there. So that's why there's a signal there on the MACD. But then it drops down and then really starts going up, and that's the one we want to catch. So I always wait for the blue line to go below the white line, or another way of saying it is the candles rise above the blue dashed line. And even then, I may not buy it because there's a lot of false indicators that will tell you, oh, it's going up, but then it just goes right back down. So what I really prefer to do is wait pretty close to the next line that I have, which is that dashed purple line. So see, I could say, okay, it appears to be going up right now. It might be a good time to buy it. I can look down here on the MACD and see I have a a series of 4 green bars. And then it turns red right here, but you'll notice up here it's still green. That's because I am using Heikin candles. So um, sometimes candles are red, but in reality they're green, and they're green, in reality they're red. This helps me because I know that when these candles are all green, I know that they're not all green. Some of them are actually red, but Heikin leaves them green because it reads it and says, "Oh, it's still going to go up, even though you've got one candle that's red. It's still going to go up." So it leaves them green. For example, right here you see these two little red candles. That's because it's Heikin. So it's red, but in reality, if you switch to regular candles, those would be green. But a green candle right away, and you think, oh, it's going to go up. I'm going to buy it right now. And it goes back down and doesn't go up. So by keeping these early candles red, you hold off on entering the trade until you're sure it's going up. That's really what you want to do. You don't want to try to get in at the very bottom, okay? I've tried that over and over and over again. And what happens usually is I end up buying it too soon because I'm afraid it's going to go up. So since I'm afraid it's going to go up and I want to get in at the bottom, I'm thinking, oh, that looks like the bottom. I better buy it now. And then next thing you know, it goes back down again. So I've learned to use these dashed lines as stronger indicators, whereas this white line here is a weak indicator, but at least it alerts me. See, and this way I have a couple of minutes to find out, oh, this one looks good, because I look at several charts at once. And so as the candles go above this dashed blue line, I think, okay, it's getting pretty close to maybe I should buy it. But I look down here at the histogram. The histogram shows that these bars are below the line there. The difference you see is below that area where it's level. And so I wait a little bit, and sure enough, there's a green candle, starts going green. So this is above the blue dash line. So I might go ahead and buy it right there, or there's usually going to be a drop. Candles, prices go up and then they drop and then they go up again. So the drops are good places to buy. You get a lower price and that increases your profits. So, I did buy this. You can see this dark green line here. And it says right here, I bought it at 275. So this would have been a good buy. But if I'm waiting to be sure, then I can wait for this second dashed line. And when that crosses, I think, okay, I'm going to buy it. So right there, and then it rises pretty quick. See, within like a minute or two, it rises before I could get hold of it. Maybe I didn't see it in time. I don't know. I can't remember. This was a while back. So, but you can see this is where I bought it. 100 shares for 275. As a beginning trader, 100 shares is all you need to buy. You don't need to buy 500 or 1,000. You probably don't have much money. And so you want to, and you're learning. So if you make a big trade of 500 shares or 1,000 shares and you lose, then you're going to have big losses. And as a beginning trader, you want to reduce your losses to very small until you really learn to trade. So what I did, as you can see, I waited until that candles went above the purple dashed line. And what these are simply moving averages. I think the blue one is a 10 or a 20 moving average. The purple one is either a 20 or 40 moving average. And the yellow one would be either a 40 or 80 moving average. Uh, and so I also have this yellow arrow here, which simply means that the price went above the yellow line. So that arrow helps me see this purple arrow. It does the same thing as the line. The candles go above the purple, so I can see that. But I have an arrow that says, hey, the price is going above the purple line. That candles are moving above the purple line. So these arrows, it's like a double indicator. The candles rising above the line is one indicator. The purple arrow indicates the same thing. So it's like two indicators for one event. It just helps me because I have so many charts I'm looking at. And so, theoretically, you could say, well, I want to get rid of the lines and just use arrows because that would clean up my chart and have a lot less stuff on there. And that would be a good idea. Only I would say for a beginning trader, I would say just leave the lines and the arrows on there together until you learn how to read them very well. Then you can clean up your chart. And so I'm in at 275 and it just goes up, 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 up. And I sell it at 318. So yeah, I should have left it longer. I should have stayed in longer. From the time I sold it, it did go up 1, 2, 3, 40 more cents. Although when it goes up really high on a wick like this, um, it's not going to stay up there long enough probably for you to trade it. So I don't try to trade at the top, just like I don't try to buy at the very bottom. I don't try to sell at the very top because if my order doesn't get filled, the price immediately stops dropping and I have to lower my price. And maybe that one doesn't get filled. I have to lower it again. So I'm losing profit. So I just rather see that, I've made some good profit, so I'm going to sell it. I don't be greedy. If you're greedy all the time, you're going to just make so many mistakes that you'll end up losing more money than you make. So I just say, look, 10, 20. The stock from where I bought it went 10, 20, 30, almost 40 cents. Yeah, it was 40 cents. And I think, okay, that's $40 on 100 shares. So I'm satisfied. I'm content with what I made. $40. I'm happy. I made $40. So, yay, and I made a profit on that trade. So that's how I trade right there.